My name is Andrew Stotz, and this is Valuation Masterclass Bootcamp Final Presentations. Tonight, we're going to be listening to one of our students present his equity research report, valuation, recommendation on Hermès. It's a challenging company to value, and so I'm looking forward to seeing his work. I also want to encourage everybody on to ask any questions that you may have. Remember, this is student research, so of course, it's not a recommendation that you should take action on. It is a recommendation that they are doing in the class. But I do think it's so valuable, the work that they're doing, that if you own Hermès or you're thinking about owning Hermès, this could be helpful. Before we kick off the show, I just want to welcome everybody here. I know our number one guy on our team, Momin, is there. Great to see you, Momin. And also we've got Kyle, who's on. Looking forward to the presentation. Welcome. And also we've got Ponrat says hello. And the Cheetah says hi. Good to see you. And also Tunikit says hi. I want to welcome everybody on the show. Oh my gosh, it is going to be exciting because we are going to be hearing from one of our students. His name is Wasutin, and nickname is Bill, and he is presenting on behalf of his team, and his presentation is going to be about the company Hermès. Let's welcome everybody else. Prao, Superwan, welcome. And also, great. I'm happy to see everybody here. Welcome. Let's have some fun. And I think it's time to welcome Wasutin onto the show. So let me just do that now in 1 second. Here we go. Come on in. All right. So Wasutin, why don't you introduce yourself just briefly before we kick off your presentation? Because I know the audience is excited to hear about, what your opinions are on Hermès. And also I know the audience will have a lot of questions, but maybe just a quick introduction of who you are, where you are, and take it away.
All right, thank you. My name is Wasutin, and you can call me Bill. I'm working as a financial analyst at the moment, and I'm excited to share my work with you today.
How many hours
Yeah,
do you
in
how
my
many hours do
valuation.
you think you worked on this particular report that you're going to present today?
I think more than 30 hours. Yeah, overall,
Yeah, and
overall.
that's why I say to everybody on this video is, pay attention. This is real quality work, and he's does along with all the other students have devoted a lot of time to getting this done. So I think we're going to get started then. And before we do get started, I just want to reach out to everybody that's listening out there and remind you, ask your questions in the chat. The questions are so valuable for the students to get feedback and get challenged on what they're doing. And so I really want to encourage questions in the chat. I also know that people will be watching this long after we've recorded it, but still, even for you, make sure to leave a message in the chat and we'll do our best to respond after the event. All right, the time has come. I'm going to bring up your presentation onto the screen. And what I'm going to do is I'm going to take myself out of this presentation, and then I'm going to have you kick it off. You've got, 15, 20 minutes, but don't feel pressure. Spend the time that you need to spend to make a great presentation. Are you ready, Mr. Bill? All
Yes,
right,
I'm
I'm going to
ready.
take myself off, and as soon as I disappear, you can start.
All right, welcome, ladies and gentlemen, to my coverage on Hermes International. I initiate my coverage on Hermes with a whole recommendation based on a target price of 2,348 per share, and that's a 4% upside from the current market price. Well, I'm deriving this target price based on the free cash flow to the firm valuation approach using the weighted average cost of capital of 6.7% and a terminal growth rate of 3%. Well, let's look at the key highlights for the company. First, cost push price increases to help Hermes sustain double-digit revenue growth. Second, strong brand appeal to support continued success. And third, online platforms are expected to drive new customers to Hermes stores. The number one risk that I see for this company is failure to maintain brand. Well, let's look at the company itself. Hermes is an international company founded in 1837. It sells 16 different categories of luxury goods. It has 294 stores globally. The company produces 95% of its products in Europe, and it has more than 7,000 craftspeople in-house, which is about one third of the workforce also working primarily in Europe. The company has a 4% market share in 2023, and that makes Hermes one of the top 10 companies in the luxury goods industry. Well, let's look at the first story for Hermes. Cost push price increases to help Hermes sustain double-digit revenue growth. Well, in response to rising costs of production, the company will increase prices by 9% this year across all product categories and in all regions. We've seen that price increases have helped and will continue to help the company to grow sales. For example, last year, we saw up 7% positive price impact on revenue growth. Well, other factors influencing revenue growth include capacity expansion, quantity sold, and foreign exchange rates. We know that the company has a commitment to open at least one new workshop every year, or yeah, every year, and that would add 7% to the capacity. And with all of these factors, I believe that the company will continue its double-digit revenue growth in the coming years. Second, strong brand appeal to support continued success. Hermes' values are rooted in its history, premium quality, and brand image. The company has been doing very well in trying to maintain the image and the quality of its products. And it has also shown efforts in trying to comply with CSR demands. Well, why is it important? Because consulting firm Bain& and Co expects that CSR aware Gen Y and Gen Z will be 80% of the market participants by 2030. So Hermes should be able to remain attractive and relevant in the market for the foreseeable future. Third, online platforms are expected to drive new customers to Hermes stores. Online platforms are an important recruitment and retention vehicle for Hermes. Last year, the company reported that 65% of online customers were new to the company. And Statista expects that the contribution of online sales in the luxury goods market as a whole would rise from 14% last year to 18% in 2027. Therefore, the omnichannel distribution channel network that Hermes has been developing in the past 7 years could serve as another window of opportunity for Hermes to communicate its brand value, to showcase its products, and most importantly, I believe, to drive new customers to stores. And that's where the company shines. Well, now let's look at the industry as a whole. I'm putting together three main points for the industry. First one is highly concentrated luxury goods market to grow slowly at 3.4%. This market last year had a value of 355 billion US dollars, driven mostly by post-pandemic spending. And projections by Statista suggest a 3.4% annual growth rate for the market, reaching 420 billion US dollars by 2028, which is a bit lower than the historical growth because of an increase in consumers' sensitivity to pricing. Second, a race to embrace technology and new season of M&As. We've seen tighter competition in the industry, which has led many players to experiment with technology and to consolidate with one another in a race to digitization and growth. For example, AI has been adopted by big players to optimize inventory management, to identify counterfeit products, and to enhance in-store experience. Bain& Co notes that digitalization is key to growth in 2024 and beyond. Moreover, we've seen a new season of mergers and acquisitions. as companies rush consolidation to support growth and expansion, especially into new regional areas and to secure resources for production. Lastly, dominant power of younger generations in the luxury trend. The younger generations, Gen Y and Gen Z, will dictate the luxury goods market. Bain & Co expects that these generations will be 80% of the market participants by 2030. Well, why is it important? Because brands must urge to prioritize creativity and innovation for these new generations. There was a survey done by TCS showing that 90% of these younger generations consider buying sustainably made items and they are willing to pay for them. Well, if the companies can show or prove that they are heading towards sustainability, the companies will be able to ensure brand image and maintain brand loyalty or even attract more potential buyers in the industry in the future. Well, now let's look at the results of Hermes in the recent periods. We see that in the second half of 2023, there was an increase of 10% in revenue. And we've seen that the company has enjoyed sustained and large margins if you look at gross margin, operating margin, and net margin. So that's very impressive for Hermes. Here is what the analysts are saying about Hermes. 12 issue hold recommendations, 10 provided buy and strong buy opinions. On average, the consensus score is 2.6 since December 2023, meaning buy. And if you look at the revenue growth, it's still going strong in the future. Here is the revenue breakdown for Hermes. Last year, the company recorded total revenues of 13.4 million euros. 41% came from leather goods and saddlery, 29% from ready-to-wear and accessories, 12% from jewelry and home products, 7% from silk and textile. And if we look at the regional breakdown of revenues, we see that Asia, including Japan, is the biggest buyer of Hermes products. So 56%. And then Europe, including France, 23%, and then Americas, almost 20%. For the four elements of Hermes, we see that Hermes is a very attractive company driven by strong fundamentals and momentum, especially if you look at the net margin and the ROE of around 30%, that's big. And if you look at the momentum, strong EPS growth and strong and positive price change in the past 6 months. If I look at the company on the world-class benchmarking scorecard, I see that Hermes is a very profitable company with strong expense control and strong revenue growth, and actually since 2019. This is my expectation for Hermes in the next 5 years. I expect that the net profit will almost double, going from 4,300 million euros to almost 8,200 million euros in the next 5 years. The company has a very strong cash position. In fact, cash, uh, about 50% is cash uh, on the asset side of the balance sheet, which is a very strong position. And the company uses minimal debt, as you can see here. And don't be surprised if I tell you that 75% is equity and retained earning. So that's a massive amount of profits that they have accumulated over the years. And I expect it to continue. Cash flow statement. So we see positive operating cash flow every year. And even if we deduct capital expenditures and dividend paid, we still end up with a decent amount of cash every year. So, and that will accumulate into the future. We see a very high current ratio with a negative net debt to equity, meaning that this company has a low financial risk. And of course, net margin and ROE is very high. For the free cash flow to the company, I will show you that we start from net operating profit after tax, and then we add back the depreciation and amortization charge. The biggest cash outflow is from capex, but even that capex is less than the depre and amortization charge that we add back. So we end up with free cash flow to the firms higher than net operating profit after tax, which means higher valuation for Hermes. Well, in terms of valuation, if we look at the P pre price to book at 13 times, which is very high compared to other consumer discretionary companies in France, in Asia, and globally. But the ROE of Hermes is almost double the global peers. But if you look at the PB to ROE ratio, it's still high, meaning that Hermes is trading at a premium already. The same goes for PE to growth. It also shows that Hermes is trading at a premium. Now let's turn to the DCF. I'm using the risk-free rate of 2.5%, the equity risk premium 5.5%, the company beta 0.9, cost of debt 3%, and I expect debt to be 10% of the total capital structure. So that gives us the weighted average cost of capital of 6.7%. And if I apply that with the terminal growth rate uh, of 3% in my valuation, I see that in the base case where sales growth is expected to be 11% until 2028, Hermes is valued at 2,348 euros per share, which is a 4% upside from the current market price. Well, in the sensitivity analysis, we see that the target price could range from 2,315 to 2,383, depending on our assumption on revenue, on sales growth. The number one risk for Hermes is failure to maintain brand appeal because the company's success has been attributed to its ancestral identity, brand loyalty, and exclusivity. And in the future, for some reason, if the company cannot maintain that brand appeal, it could mean a gradual loss of interest in the company, in the brand, and in future prospects. Ladies and gentlemen, I believe that Hermes is a great choice of value stock with strong fundamentals, strong EPS growth, and future earnings prospects. I'm giving a target price of 2,348 euros per share, and that's a hold recommendation from me. Well, I hope that this session has been useful and informative, and I'm happy to answer any questions you may have after this.
All right, well
Thank
done.
you.
Leave that presentation up because I want to go look at a couple pages. We've got some questions rolling in, and I welcome everybody to ask questions. Even you may think it's a silly question. That's okay. We take all questions. You'd be surprised. Everybody maybe has a question, and they may think it's silly, but once they ask it, they realize a lot of other people had the same question. I want to go back to the page that you did, the valuation, and let's talk about that for a couple of minutes. So I was looking at your cost of equity, which is 7.2, and your cost of debt, which is 3.0.
Yes.
I think it's very possible that those could be a little bit low. In other words, it could turn out that cost of equity could be 8 or 9%, and cost of debt, could end up being 4% or 5%, depending on where interest rates are going. I'm just curious, what are your thoughts on first that observation? Do you agree with that, or do you think that your numbers are realistic?
Well, given the current environment of interest rates, you may think that the cost of equity could be high. But if I think about it, this company is based in Europe, in France, which is a stable company, and it is a stable uh, with a strong cash position as well. So the equity risk premium of 5.5% and the cost of equity at 2.4%, I think that's reasonable.
Okay. And cost of debt at 3%. What are your thoughts on that?
Um, I think the interest rates are rising. We are over the period where the interest rate is really low. So now I think that's the should be the cost of debt that is sustainable for the future. And I think central banks would maintain the high interest rate environment. So that's why 3%.
Okay, so let's look at your target price of 2348, right? 2348. Now
Yes.
let's go to the next page and let's just say that I want you to imagine that that my question about the discount rate has some validity. So if the cost of equity goes from 7.2 to
Yes.
7.6, just a 4 percentage point or 4.4 percentage point increase, how would that affect your target price?
Well, um, that would the target price would be a bit lower because we have a higher discount rate, so it would be 2,200 euros per share.
Okay.
Yeah.
And would that, if let's just say that we agreed for a moment that your assumptions are a little bit low on those, would that change your recommendation?
Well, no, I'm still recommending hold because of the future prospects of the company are still looking good.
Okay. All right. So let's go through some of the questions. The first question is coming from Momin. He says, as your recommendation is a hold, so if you wanted to pick a side, would you be more of a buyer or more of a seller? Come on.
All right. Well, I think now if you remember, if you recall, the price momentum is positive, right? If you want to go with the trend, so you can buy now, and then if it turns out that you pick the wrong side and the price goes down, and then you could, make a cut loss point for yourself or something. Yeah. But the point is, the current market price reflects the fundamentals that I'm seeing for Hermes.
And if the stock price fell by, I don't know, 10% or 15%, would you become a buyer?
Well, 10%, uh, yeah, I would recommend buy from the current market price, right? Yeah.
Okay.
So that would
Um,
give you a margin of about 10%.
okay. So Kyle says, what are your views on risk relative to the talent pool for future craftsmen and women, and how any manpower shortages might cause labor costs to increase? So the
I
talent
impressed
pool for craftsmen.
Hermes put a strong emphasis on developing the craftsmen and women. And I believe that they will continue to provide incentives for the people working for them at the moment. And I mean, these people are loyal to the company. So in terms of labor shortage, I don't think it would be uh, a major concern for Hermes.
Okay. Um, hold on one second. I'm going to bring you up to full screen, and then we're going to go through some others. Okay. Taniket says, what form of M&A would you expect to see from Hermes?
Well, this is an interesting question because we have seen a trend of M&As in the industry overall, right? But for Hermes, I think we can see it as a single brand company. So the value of Hermes is Hermes. So I don't expect any major M&As for this company. Yeah.
And I know tomorrow we're going to have one of our students present on LVMH. And sometimes people refer to Hermes and LVMH as luxury goods. Some people don't agree that LVMH is a luxury good because of some of the brands that they have. But how would somebody think about Hermes in relation to another company like LVMH?
Well, I think the position of Hermes is very unique and exclusive. So in terms of exclusivity and luxury, I think Hermes is very clear. But if you consider LVMH, which they have different brands under the portfolio, not all the brands have the same image. So I think that's the difference.
Okay. Another question is, I see that your PE and price to book are going down gradually. So is that an indication that it could be a buy later, given its growing EPS and stable ROE?
Well, uh, yes, it's a forward PE and PB, right? And the company is growing, well, fairly strongly, so it's going down. But um, if the question is whether or not is a good buy at the moment, we have to compare that to the peers. And with that comparison, Hermes is trading at a premium at the moment. So I would I would rather hold if you have shares in the company. But if you don't, maybe you can wait a little bit for the price to go down. Yeah,
Okay.
to have that margin of safety.
Another good question from Moment. In your perspective, what is better for Hermes to grow online stores or traditional stores?
My observation at the moment is that they don't grow stores as much, and they also don't grow online sales that much. I mean, they are not pushing for online sales. The way that they use online channels is that they want to increase traffic to store. So with with more traffic and people coming to store, they could increase the brand value. They could increase the scarcity.
Nope. They could increase
Sorry,
the scarcity.
uh, am I still on?
Yeah, you said they could
Right.
increase the scarcity.
Increase scarcity driven brand value. So um, I think Hermes is already good doing what they are doing, focusing on in-store experience with when consumers enter the stores, they can get the feeling that this is the luxury that I want. I think Hermes very shines in that, so they should keep doing that.
I'm not sure if I understood it correctly, but can you just describe what their strategy is with online?
Online, Hermes is not really pushing for online sales. They want to put online presence for the existing stores, and then they want to, increase traffic to stores because online customers are mostly new to the brand,
Mm.
and they can attract new customers to store. So that's the traffic, and um, yeah, with more traffic, and then uh, it kind of shows that the company is still popular. So they come to get in-store experience and yeah,
So it's
get
different
value as
from some a company like Nike where they're actually trying to move their revenue online. Hermes doesn't see its online premise as a driver of revenue itself, but as a complementary driver of store traffic.
yes, yes.
Okay. Uh, Moment asked the question, what could go wrong if they lost Asia? And I think maybe the way to think about this is imagine that Asia goes through some economic downturn and the rest of the world, let's just imagine, isn't going through that downturn. How significant is Asia to Hermes' overall revenue? What should we think if we start to see that possibility happen?
Well, if you remember the revenue breakdown, Asia is including Japan is more than 50% of the revenue. So if they lost Asia, so that would be a very big loss for Hermes. But I think the luxury goods market is quite unique, where even if you have a financial crisis or anything, it doesn't really, go down. I mean, if you look at Hermes in the past 15 or 20 years, the only negative growth that they had was during the COVID-19. So I believe that revenue growth comes mostly from traffic. So they lost traffic during COVID. So that's why sales dropped during that time. If we go back a bit further in 2008, the global financial crisis, actually the sales grew high single digits. So
Mm.
I think given that maybe Asia is going into a financial crisis, as long as traffic is there, then I think Hermit is still, doing okay.
Okay. So we had asked you if you were a buyer or a seller, but Tanikit's asking a more practical question. At what market price point would be a right time to buy?
Well, That depends on your risk preference as well, but I would say maybe 10 or 15% lower from the current market price.
Okay.
But
Okay.
if you wanna, especially if you wanna hold it long term, yeah.
And the last question that we've got is just if you can summarize the main factors of your valuation and how you come up with a hold. Why is it that you're coming up with a hold? Maybe just bring together your main points as a wrap up.
Well, the main factors are are growth assumptions. Um, well, Hermes has a very strong pricing power, so they could increase prices, well, basically every year, and then they open a new workshop. So that's maybe 10 or 15% upside.
Mm,
But you know, I just don't want to be too positive. So I bring that down to low double-digit growth. That's one thing. And the company is based in France, so I give it a low cost of equity.
mm,
So these tools are kind of, fighting against each other. I that's why I got, a price more or less the same as the current market price, and it's a hold based on the DCF valuation.
okay. So how does it feel to graduate from the Valuation Masterclass Boot Camp?
Am I graduating?
You just did.
Right. Thank you. Well, it now uh I'm proud, honestly, of
Mm,
myself, and it feels incredible and unreal because just 6 or 5 weeks ago, I did not really have any real experience with financial modeling and company evaluation. I really wanted to have that experience, and now I've had it. And at some level, I believe that I learned it from the right people, from the right team. So thank you, Andrew, Moment, and Proud, and the team behind it. Yeah, thank you.
that's awesome. Yeah, I mean it's amazing to think you went from zero to where you just presented an excellent comprehensive research report. Why don't you tell us about the transformation that you went through? How did you transform? What's different about you now than when you started in Evaluation Masterclass Bootcamp?
Well, first of all, I know how to do company evaluation. So that's first. And I also know how to form my own opinions. So I was kind of afraid to, make up my mind. And in this boot camp, I was put to a test, and then I I had to have my own opinions, and I learned to defend and protect my position.
Yeah, I mean, and the important thing is that's not something you can learn from a book.
Yeah, also, I just want to say that I realized that being an analyst is a lifelong journey, and you was very clear in that.
Mm.
So yeah, so after this boot camp, I feel excited. And well, I remember you said that uh, it's like climbing up a mountain, right? Actually, climbing up mountains, there will be ups and downs, ups and downs. And Mr. Andrew, you have been there already.
Mm.
And I also remember you said that you want to get us there faster. And well, uh, having been through the boot camp, I believe that the Valuation Masterclass bootcamp is just a reflection of your aspiration. So, yeah.
Yeah, I mean, you can imagine how proud I feel to see your performance as well as all the students get to the top of the mountain. For some people, it is a very hard journey. For others, it's a steady slog. So it's just such a great thing for Momin, myself, Prow, and the team to watch, your accomplishments and the other students' accomplishment. So tell us, how did you originally hear about the Valuation Masterclass Bootcamp? And then why did you decide to join?
Well, I first heard about this bootcamp from my boss. He recommended me. Well, I have to admit that at that time I know everyone was busy. I was busy also.
Mm.
So I work full time from 8:30 to 6, and I also have teaching. But I figured that during the weekend I had teaching. But I figured that skills in financial modeling would get me far beyond where I am now. So I decided, okay, I will put everything down, focus on this for 6 weeks, and now I can say that it was the right decision.
So your boss gave you good advice.
Yes. Thank you, boss. We are
Yes,
watching.
exactly. Well, what a great wrap up. And I just want to, thank you and appreciate the journey that you went through. We know that in the Valuation Masterclass Bootcamp, it's a 30 to 40% drop rate. And it's a challenge, right? It is a huge challenge to get to this point. So you should feel very proud. And I know all of your teammates and other members of Valuation Masterclass Bootcamp 14 are proud of you, as well as all the people on our side. I'm going to take you out of this and then stay on the line because you and I'll talk for a couple minutes after this. But congratulations for graduating, and I'll talk to you in just a bit.
Thank you. Stay in
Yep.
touch.
Yep. Well, wasn't that amazing? What a great comprehensive report touching on all aspects. And the point is that Washington went from 0 to a full report in 6 months or 6 weeks. And what I love about teaching the Valuation Masterclass Bootcamp is that I've been up that mountain. I've been up that mountain from starting at scratch to figuring out how to write research and how to improve myself, how to present my arguments, going up against some of the smartest men and women around the world and getting my arguments shot down and then rebuilding them. So many things that I've been through in my journey. And now it's great to be a guide to help other students to go from 0 to the top of the mountain. And I tell you what's even more exciting for myself and why I do this is because it's not about this mountain. This mountain is just the start. What it's about is watching each of my students climb the next mountain on their own, and the next mountain, and the next mountain. And that is the ultimate joy that I get from teaching in the Valuation Masterclass Bootcamp. I want to thank everybody for attending this and listening in. I appreciate you joining in. I appreciate the questions. Most importantly, if you want to get to the top of that mountain, go to valuationmasterclass.com and learn more about it. And I'll see you in the boot camp.